Well, good morning, Joginder Rana here. So, topic for our discussion today is motor trade policies. Motor trade policies. So, the first question is who can avail trade policies? Motor vehicle dealers, motor vehicle repair or service centers, anybody in motor vehicle business. There are three types of policies: motor trade road transit risk policy, motor trade road risk only policy, motor trade internal risk policy. Road transit policy says motor vehicles traveling on its own power. Policy standard commercial vehicle is issued with deletion of NCB clause and section 4, that is PA cover. Separate policy or declaration policy can be issued. Coverage is limited to transit from a specified point to a specified point. This is road transit policy. Perils covered, exclusions as per the standard motor package policy for commercial vehicles. Depreciation as per standard package policy. Deletion of 50% limitation clause for damage to tires on payment of extra premium. IRDV, same rules as applicable to standard motor package policy. Then comes motor trade road risk policy. Basis of this policy is that trade certificate basis or named driver basis. This policy is issued on two bases. Trade certificate issued as per the Rule 35 of Central Motor Vehicle Rules. Period of validity is 12 months. Numbering of trade certificate: AB State Code, 12 District Code, TC1 trade certificate and number is given. So trade certificate shall not be used on more than one vehicle at a time. It shall not be used up on any vehicle other than vehicle in the bona fide possession of dealer. Rule 39 of Central Motor Vehicle Rules applicable. Rule 41, that is purpose for which trade certificate can be used, is for test during or after repair, processing to and from any place for registration, trial demonstration, for delivery to customer, proceedings to or returning from airport, railway station, wharf, for or after being transported, proceedings to returning from vehicle exhibition, register as per Form 19 to be maintained in duplicate and a duplicate copy to be carried during the trip. Details required in Form 19. The details required are in the prescribed columns, which includes mileage covered, hours of return, signatures, driver's name, purpose for sending, like that. Motor trade road risk. All trade certificates in the possession of dealer to be declared for insurance. Not more than one policy for trade certificates and one policy for named driver basis shall be issued in respect of each town. Policy form: motor trade package policy, rating as percentage of IDV. For losses, rupees 25,000 for vehicles other than two-wheelers and rupees 7,500 for two-wheelers to be covered at extra premium. This is for motor trade road risk. Special features includes that cover loss or damage to vehicle in public place or temporarily garaged during the course of journey elsewhere than in any premises owned or occupied by the insured. Perils as per standard motor package policy. Depreciation as applicable in standard motor package policy. Total loss and IDV as per standard motor package policy. Geographical area of operation within 80 to 120 kilometer radius from the insured's address. Excess applicable as per GR 40. Additional rate for deletion of 50% limitation clause in respect of damage to tires. Extension for demonstration purpose. Insured or employee of the insured to accompany when being driven. Extension for private use by member, director and employee of the insured. Coverage section 1, damage to owned vehicles, rupees 50,000 for any one accident. Section 2, bodily injury, unlimited. Property damage excluding damage to vehicles, rupees 1.5 lakh, any one accident. Then damage to vehicles, third party, rupees 1.5 lakhs, any one accident, rating based on superficial area occupied and annual basis. So this is for motor trade internal risk package policy. Now section 1 says loss or damage to any vehicle owned by the insured or his family members caused by accidental, external and visible means and occurring in or on the premises. Exclusion first, loss of use, depreciation, wear and tear, electrical and mechanical breakdown, failures or breakage, damage to tires by application of brakes or by punctures, cuts or bursts, loss or damage occurring in or about the premises through negligence of insured or any person acting on his behalf, accidental death or injury to any person other than employees or members of the insured family or household unlimited, accidental damage to any vehicle held in trust or in the custody of or control of the insured, other third party property damage, this section 2. General exclusions includes internal risk policies are subject to excess as per GR 40, that is rupees 50 for two-wheelers and rupees 500 for other vehicles. Earthquake and STFI, that is storm, tempest, flood and inundation, royalty stack perils, fire or explosion, any consequences of burglary, housebreaking or theft, damage to property while being worked upon and directly resulting from such work, that is defective workmanship, death, injury or damage caused by demolition, structural alterations or additions to premises, loss or damage in connection with the use of power-driven cranes, elevators, lifts or hoists other than car hoists having lift less than 6 feet of equivalent. Comparison of motor trade policies says policy form includes 10 perils in all the three formats, that is commercial vehicle liability only policy, motor trade package policy, motor trade internal risk policy. Exclusions as per standard commercial vehicles, same. Depreciation applicable to all three. Risk covered differs because the road transit policy includes transit risk only. Motor trade package policy is for public place plus temporary garage only, and the internal risk policy is in on insured premises only. CPA is not applicable and CB is not applicable. Policy access differs, towing charges also differs. So as far as case study is concerned, motor car moving under trade certificate meets with accident. Claim form reveals the following: use, private, occupancy nil, driver relatives of the employee, driver license valid but no wage. So this has to be decided whether the liability is payable or not. These are the things applicable to all these three different policies. Thank you. Thank you very much.